Bitcoin at $80,816, up 1.5% in the last 24 hours. Overall stance is neutral, structure sideways, momentum balanced. Over the past 90 days, price has been ranging with no clear trend, bouncing between recent lows near $60 K and highs around $126 K. Today we sit near the upper end of that range, but the tape is mixed. On the daily chart, MACD is above its signal line, and the histogram is positive, indicating momentum is building up, but modestly. The daily candles show a sideways structure with no clear higher highs or higher lows. Short-term traders should watch for a potential cross below if momentum fades. Zooming out to the weekly chart, MACD is also above its signal line with a positive histogram, a constructive sign for the bigger picture. However, price closed below the 50-week MA last week, a bearish signal that tempers the bullish weekly MACD. This disconnect suggests uncertainty at higher timeframes. On the monthly chart, a clear downtrend channel is in place. Both the resistance and support lines are sloping downward, about 9% and 8% per candle respectively. Price is currently near the middle of that channel. A breakout above the top rail would be a major long-term bullish flip. A failure near resistance keeps the downtrend intact. On the daily chart, RSI sits at 54, right in the neutral zone. No overbought or oversold pressure. However, the stochastic lines just crossed up in overbought territory, which often signals short-term buyers stepping in, but also warns that the move could be stretched. Typically, a cross like this leads to a few days of follow-through before cooling. Immediate support sits near $78,000, while resistance is at the recent high of $126,000, a distant target. Watch the $80 K level as a psychological pivot. If it fails, a retest of $78 K is probable. Top story today is Bitcoin reclaiming $80 K on strong ETF inflows, but gains are capped by sticky CPI data at 3.2%. The FOMC April statement shows dissent on rate cuts, reinforcing a hawkish stance. Next major catalyst is the June FOMC meeting. Net bias is mixed. CoinTelegraph reports Bitcoin turning risk on as stocks hit new highs and miner profits rise, setting a possible path to $85 K. Improved derivatives metrics support the bullish narrative. BLS data shows March core CPI at 3.2%, reinforcing expectations that the Fed won't cut before summer. This caps risk appetite and creates headwinds for crypto. A CoinTelegraph article notes short-term holders' cost basis is near $80 K. Flipping that level to support is crucial to cement the bull trend and avoid a pullback. Polymarket shows a 100% chance Bitcoin stays above $76 K today, but only 1% chance of hitting $150 K by June. Traders with skin in the game expect sideways action near term, contradicting any breakout hype. Aggregate verdict is neutral. Sideways structure, mixed signals on weekly and daily. Sentiment is neutral at 50 on the Fear and Greed Index. Watch for a close above $80 K to confirm support. Failure may bring a retest of $78. Top by market cap, BTC up 1.5%, ETH up 0.5%, USDT flat. Biggest mover is figure HELOC down 0.8%. Overall mixed action with no clear leader. This analysis is for educational purposes only, not financial advice. Data sourced from CoinTelegraph, CoinDesk, and official economic releases. Full URLs in the description. That's it for today's Bitcoin check-in. See you tomorrow for the next update. Stay sharp.